Cyclical stocks driving the Dow and S&P 500 higher Wednesday afternoon. Well, let's get a read of the markets from Sean Thorpe. He's a portfolio manager at Aristotle Capital Management in Los Angeles. Welcome and good afternoon, Sean.
Thank you, Fred. Thanks for having me.
Great to have you with us. Sean, I know your focus is the international markets, but I want to first start with the United States. It is the one-year anniversary of the start of the bull market. But given the way stocks have run, are we already in a bubble?
That's a great question. I don't think we're in a bubble. I think we've got some room to run. It has been a strong period of time, both domestically and internationally. But I think we're okay. It's what we do here is pick individual companies to invest in, and you need to invest intelligently and buy the right businesses. As long as you're focusing on the right elements, we believe you can do quite well even from here.
What makes you think it's not a bubble?
Ultimately, a business is worth its cash flows and the capital required to generate those cash flows. So from a broad market perspective, it could be viewed as a bit stretched, but from what we do here, we're buying individual businesses and we see great opportunities. You just need to be sharp with your pencil and buy the right businesses.
Would investors find more value overseas than the U.S. markets at these valuations?
I would say that optically, the non-U.S. markets do look less expensive than U.S. markets. By looking at broad measures, you can often be misled about true valuation. But from a broad stroke, the non-U.S. markets are definitely trading at a discount relative to U.S. markets.
And which ones do you like the best that investors should look at?
Right. They're great businesses in the U.S. and outside of the U.S. My focus is international equities and in the developed markets. So there's some great regions, some great companies, some great countries that have great companies. They're great businesses in both places.
What's your favorite market right now overseas?
Yeah. Well, we have quite a bit of our portfolios invested in the UK and in Japan. We're in 14 different countries, so we're well diversified internationally. There are some great businesses, as I mentioned, in those two countries. But one thing to focus on is just because a business gets its mail in, for example, the UK, it doesn't necessarily mean it's a UK company. And we get some great emerging markets exposure through our UK holdings. And we get some wonderful exposure through the Japanese companies as well.
All right. Why Japan? I mean, look at the overall Nikkei. It's up 57% over the last 12 months. Forward PE 20 times. This for a country whose the Nikkei has been down for decades, having peaked in 1989 at 39,000, just near 39,000.
Yeah, no, it's been an interesting 30 years to say the least. Again, focusing on individual businesses, we have a handful of great industrials in Japan that are really part of the future of the world, whether it be in robots in the automotive space. They're just some great businesses. So again, looking at the broad market, one could be put off, but on an individual company basis, there really are some great businesses there.
And what are some of the companies that you like in Japan and the UK?
Yeah, I'll focus on one Japanese holding, which is Sony. Sony's an exceptional company, wonderful, three key businesses that really drive the bulk of the cash flow. Their image sensor business is outstanding, and image sensors are going into more and more devices, from cameras expanding into the automotive space. They're a big player in music publishing. They're one of the world's biggest music publishers. So as people tend to stream more through Apple Music, Spotify, Tidal, sources like that. And then there's the gaming business as well. Their gaming business has done incredibly well. It's virtually impossible to get a PS5. And the way the gaming business has been changing over the last 10 years is very good for gaming companies. With the rise of the internet and the ability to download and update and modify and sell virtually, as opposed to having to go into a physical store to buy goods, it's been wonderful for a company like Sony.
Well, Sony's profited, I guess, from that stay-at-home trend, but also it's considered there's a cyclical part to it too. They're in the movie business. The stock has already had a good run. What makes you think there's a lot more room to run, or is there?
I hate to use a term like target addressable market (TAM), which is a term that's thrown around quite a bit, but the runway for Sony is vast, particularly if you look at the image sensing business. The total addressable market of where image sensors can go is vast and expanding, particularly as we evolve cars, right? There's a huge shift to electric vehicles, autonomous driving. These sensors are a key part of the automotive cycle. Not to mention, if you look at, as I mentioned, the cell phones, the cameras have gone from 1 to 4 on many of these cameras, and there's plenty of other uses for image sensors. So we think there's quite a bit of room to go.
All right. Thank you, Sean. Our thanks to Sean Thorpe of Aristotle Capital Management. I'm Fred Katayama in New York. This is Reuters.